and I was glancing at the news section over here. I'm gonna pop this open here, and the second thing up there said Jim Cramer says nothing can stop Palantir, nothing. And I was like, oh, it's game over. Palantir is going to zero at this point. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now let's get into the lesson of the day. Okay, so be sure to stick around to see how we rank this out of 10, and of course, subscribe if you haven't done so already. So today's video is called, If You Are a Palantir Shareholder, Get Ready. Get ready. This is coming from the Tom Nash channel, and I want to see what we got to get ready for.
Folks, we have an urgent warning for every single Palantir investor out there. Unfortunately, Mr. Jim Cramer himself, the reverse Midas man who is undefeated, just said that Palantir cannot be stopped.
I saw that when I was I was in an Outlier, and I was glancing at the news section over here. I'm gonna pop this open here, and the second thing up there said Jim Cramer says nothing can stop Palantir, nothing. And I was like, it's game over. Palantir is going to zero at this point.
This means we're going to the abyss. We're going down to the depths of hell, folks. This is just the beginning of a very, very tumultuous ride. Unfortunately, Jim Cramer never misses, so brace yourself, buckle up, because this is about to get wild. Now, jokes aside, he's not the only person to talk about Palantir, because today as well, Dan Ives, who is a very respected analyst and a guy who has been very right about Palantir, one of the only ones who got it right early, also one of the ones who got it right about Tesla early. I'm seeing a pattern here. So Mr. Dan Ives, one of the best analysts in the business, the guy who also called Palantir the Messi of AI, a reference from the world of soccer, and by the way, he was not wrong, just came out today on X posting that their price target, the Wedbush price target, is going up from 75.
Ooh, okay. Well, it wasn't just a couple days ago. We were looking at one analyst rating. I was like 28 or something. Yeah. 28. And now what's the stock at right now? Stock's around $76. Like, which way is it going to go, people? Do you think it's going to go up or do you think it's going to go down? Let me know in the comments, of course. But I'll tell you one thing. We do have that buy signal in Outlier. That came on December 24th. And it's about flat from where we got that buy signal. But the important part is, while the greed got sucked out, the fear went up, and now that fear is gone, and now the greed is coming back in. And that greed is coming back in when it's near these highs right here, which is exactly what you want to see if you are a shareholder here, right? Now, let's talk about the Outlier trend template real quick. We do have the 10 over the 20, prices over the 50. And of course, this changes quickly, right? You got to be adaptable, okay? It doesn't matter if you're a short-term trader or a long-term holder, right? You want to be on when it's going up. You want to be on it when it's going up. And you can do that with the Outlier trend template right there, 10, 20, 50. But keep in mind, these absolutely can change within the span of a couple of days, right? We did actually have a bearish trend template set up here. And you have to be flexible. You have to be adaptable. Because even if you did start to go short right here, I mean, you'd be out, a couple bucks, right? But if you, let's go back to the other side of this trend template here. If you bought in when the trend template started to go up, which I have to go way back, right here was the last time that it was not crossed bullishly. It went up 200% basically. So you know what? I'll give up a couple bucks here and there to be wrong if I can be right and go up 200% on the other side of it.
$5 to $90 per share, a significant increase, which again, according to everything we've seen in the past few years, keeps Dan Ives ahead of the pack as far as his price target for Palantir. And he also says on that very same post on X that he sees Palantir as the next Oracle or the next Salesforce. Now, if you've been a part of my community over the past few years, shout out to the community. You can join right now on patreon.com/DomNash, get access to our Discord. If you've been watching my channel over the past few years, how many times did I compare Palantir to Salesforce? I always said that the floor for Palantir is Salesforce, a $200-300 billion company with the...
Let's do this. Let's do a side-by-side with Palantir and Salesforce since you brought that up. So I need to change this to multi-symbol view. And on the left, we'll do Palantir, LTR. And on the right, we'll do Salesforce, which is CRM. And I mean, that's quite a decent mirroring of the two right there, though. Salesforce has had a bit more of a rocky start, but it definitely has the same trajectory here. But I would always and certainly never want to forget about market cycle investing, right? Because what we're looking at right here reminds me a lot of this. Reminds me a lot of this right here on Palantir. I'm not saying it's going to go down, right? But when people get irrationally exuberant, let me put this right here. When people get irrationally exuberant, that's when things like this can happen, right? I mean, look at that. It's even got this little pullback right here, exactly like this. Could this be the top? Could this be the top of Palantir? Right? I don't know. We could look at it on the other side with CRM when it was going up. Come on, there we go. Could this be the top on Palantir? If we look on CRM, right, you could say that the hope and optimism started coming down here. You got your euphoria and your complacency, and then the anxiety, panic, denial, and then it started over again. Dude, that's crazy. And if you're going to make that correlation right there, you might want to be making this correlation to the market cycle investing, right? Look at Palantir, that could be the left-hand side. Look at CRM, Salesforce, where it's already done the left-hand side, brought it down on the right, and has built up another left-hand side. Whoa, that's pretty cool. I don't know. This is just what I see, right? I have no skin in the game whatsoever. But it's interesting to see. I love talking stocks, right? I don't watch sports. I don't know if you do, but I'll tell you one thing I do watch. I do watch company prices like they were sports.
Business to business, B2B setup. Now, I think that Dan Ives is actually talking about the bottom of Palantir, not the top. And I'll show you in a second why. So Dan Ives is saying $90 per share. He's saying, hey, it's going to be either Oracle or Salesforce, somewhere in that region. That means that he's seeing the current share price of whatever day you're looking at this, but in the 70s, is very, very low. Currently, Palantir is trading at a market cap valuation of $175 billion. Shout out to the people who sold at $9, right? So $175 billion market cap. And the valuation of Salesforce is about 300 billion. The valuation of Oracle is about 500 billion. So basically, Dan Ives is telling you that he sees Palantir as 70 to 185% bigger than it is today, based on what Oracle and Salesforce are as companies. He's not saying that they have the same business. He's not comparing them as far as the products they offer, but he's saying that the size.
He's saying market cap could get up there. I get that.
Is pretty much in the same ballpark. That means that he's saying that Palantir has the potential to go 70 to 185% from this point on.
It absolutely could. Now, as you know, as will be written on my tombstone, only price pays. So let's focus in on price right now. Price is absolutely in a bullish trend right now. We do have that buy signal. We do have the fear coming out of the stock and greed coming back in. So I'm bullish on Palantir right now, but I'm not like $500 bullish, right? I'm definitely bullish. Definitely bullish. We are leading up into earnings, which is one of my all-time favorite plays. It's the trade up into earnings. You can make buttloads of money, but I don't like to trade into earnings because there's a lot of risk that can come on with that. So let's do something real quick. Let me log into my broker platform, and I'm going to show you how to calculate the expected move of earnings for Palantir. Give me just a moment here while I'm logging in. All right. I put in my password, Laser Sharks 42069. Okay, got it. So the way that we calculate the expected move is actually pretty simple. But before we get to the expected move, let me show you how I calculate it, or the way that I look at trading into earnings, right? Leading up into earnings. Is the trade already profitable? Well, most likely, if you bought Palantir at any point in the past, you're up money. So most likely, yes. Second question. Does the expected move break the trend line you're following? Well, that's a good question. Are you following a trend line? Do you have an exit strategy? For me, I'm always using the 10-period moving average. The 10-period moving average, here's a cheat sheet. Screenshot this after I show this to you. This is a cheat sheet that I got from one of my mentors, Steve Burns, author of millions of books on trading and investing. The 10-day moving average right here, that's the indicator of the short-term trend. If price is above the 10, the trend is going higher. If it's below the 10-day, the trend is going lower, right? Fight me on it. Fight me on it as much as you can, because it's right, okay? It even told you right there on this candle, December 18th, that the trend was bending, and it did. Took a couple days, but it did, right? And now price is back over that 10 EMA. So for me, the 10 EMA is my go-to. I want to be in it if it's above. I don't want to be in it if it's below. So that is why I always say does it break the expected trend line or does the expected move break the trend line you're following? So right here, that would put it at around 73 and change, 73.21. Now, of course, you would want to do this the day of earnings or the day before earnings to figure out where this is at to get the real pricing. But we're going to go ahead and price it out as if we could do it right now. So earnings are on February 3rd. So I'm going to open up this options chain here. We're going to go to February 3rd for Palantir. As close as we can get to February 3rd, but after. So that'd be February 7th. Now, the way that you would price this out is you would click on the buy for the calls and the buy for the puts. And that's going to get you an at the money straddle price. And at the money straddle means that you're buying an option at the money. But you know what? I'm open to see if it could go either direction. I don't want you to make that trade. That's a really bad trade. It's going to cost you $11.89 to get into that trade. Now, what you do is you take 85% of this. So you say 11.89 times 0.85. And honestly, I don't know why it's 85%. I think that's a standard deviation. I know that's not a standard deviation. That's 68%. Either way, what I always was told was 85%. So a $10.10 move up or a $10.10 move down is the expected move. So if we go $10.10 up, that's a 12% move either direction. Right? Would that break my trend line? Abso-freaking-lutely it would, right? But if it did work and it went up, by God, that could be a great trade. Now, it doesn't mean that it will go that high. It's just saying that this is the ballpark that we think it could go somewhere in this range here. It could go 10 cents. It could go $10. It could go $50. Nobody actually knows, which is why when I come into a trade, I want to already be profitable. I don't want to risk everything to find out if I'm going to make any money, right? If I'm already profitable and I've got room, okay, cool. So this is am I already profitable? Do I have room? And then if that's both true, then you know what? I'm interested in holding through earnings. If not, in this case, I would not. But you do you. That's what I always want to put out there, right? This is a market, and you can take whatever you want to the market. And you know, like I say, we got the bullish trend, we got the buy signal, we got the fear coming out of this and the greed coming back into it. So it absolutely could pop off.
On, and I think he's talking about the bottom. Now, look, I know you all read the Peter Lynch books, you heard the lectures, I did as well. I'm a huge Peter Lynch fan. And Peter Lynch always says, when it comes to growth companies, the moment you want to sell a growth stock is when two things happen. The price to earnings gets absolutely out of whack, but the other thing is when the analyst recommendation.
So what is out of whack? Can you define out of whack? I don't trade based on gut decisions. I don't trade based on if something's out of whack. I want to know, is that PE 10? Is it 100? Is it 1,000? What is out of whack?
Recommendations start to fly in and they're positive all of a sudden. It's again the moment where you want to consider selling. If the hype is getting stronger,
if the hype is getting stronger, if irrational exuberance is running out of control, that may be the time to sell. Let's do that side by side again. If irrational exuberance is running out of control, that may be the time to sell, right? That euphoria that he's talking, that is exactly what he's talking about. The euphoria right here. I'm not saying it's going to happen. Absolutely not saying that that's going to happen, but it could. And I don't want you to get so deep emotionally connected to Palantir that you don't see the writing on the wall right here, that this has happened time and time and time again throughout the history of time. It wouldn't be the first time that Palantir would be the first company to come down after this. But you know what? It's very possible that we're actually down here in the hope and optimism stage, and it could continue on further. I don't know.
Analysts are recommending the P is flying out of the stratosphere. This is the time to get out of Palantir, according to Peter Lynch. I think if Peter Lynch was asked this question and he was presented with the 360 price to earnings of Palantir and the massive, all of a sudden, recognition it's getting in mainstream media, Jim Cramer is a great example. He would say, hey, it's not a good time to own this stock. In fact, Palantir might be due for a correction. In fact, it probably is. But as a long-term investor, I simply don't care, and neither should you. I'll explain in a second.
Oh, no, you should care beyond everything. You should care more than anything. If a stock is going down, you don't want to own it. I don't care if you're a long-term investor. This is the soapbox that I get on and why I like to make these videos so much. Because if you are a long-term investor, are you cool with losing 60% of your value because you're a long-term investor? Do you think the people who own AMD right now are super stoked that it's going down? No, I don't think they are. I don't think they are at all. I don't think they are one bit, right? Because outlier trend template 10, 20, 50, it was going up. Outlier trend template crossed down, it went down. It did a little bit of chop here and there. And that's part of the game. But then it's been going down for months. You think the people who own AMD right now are super stoked because they're like, I'm a long-term investor. I'm just going to hold this for 7 years. No, I don't think they're stoked at all. In fact, the latest nickname for AMD is Advanced Money Destroyer. Do you want Palantir to become, let's make a nickname, perpetually losing trading resources, PLTR, perpetually losing trading resources? I don't want that. But look, you do not, look at me in the eyes. You do not have to hold Palantir while it goes down. You don't have to hold anything while it goes down. Throw the trend template on your chart, follow the trend. If you are a longer term investor, just follow the longer term moving average, maybe the 50-day. If it crosses below the 50-day, get out. If it crosses above the 50-day, maybe that's an opportunity to get in. But you don't have to hold the stock as it's going down. Nobody's making you do this. And if you say you're not going to sell for tax reasons, look at AMD and tell me for 1 second that the people who are holding this as it's down 50% wish that they had sold it and had paid taxes on it. This is why I make these videos. This is what grinds my gears. You don't have to hold anything. Nobody's sitting there telling you have to hold it. Let's continue on.
Why? Because you see, in the case of Palantir, the PE ratio, the price to earnings ratio, it doesn't really tell you the whole story. It
doesn't matter. PE ratio is absolutely 1000% meaningless because only price pays. Only price pays. You're not getting paid on the PE ratio. You're not getting paid on whatever the PE ratio is yesterday versus today. You're only getting paid on if the price of the stock went up yesterday versus today.
It's very easy to analyze and disqualify a company based on a crazy PE like 360. I get it. It works very well with Excel spreadsheets when you have to qualify and disqualify hundreds and thousands of companies. But when you look under the hood of Palantir, you find a whole different story. And this is the part I want to emphasize in today's video. If you actually look at the forward PE of Palantir, it's still out of whack, but it's 150. Still very, very high, 5 times higher than NVIDIA, right? But a lot less wacky. And if you take a look this time next year at the forward PE of Palantir, it's going to be in the 80s. And then you look at it again, it's going to be in the 40s. Palantir is growing into its valuation, into its PE ratio, just like Tesla did, just like NVIDIA did, just like all the leaders in the market did, because they will always be at a premium. If you want to buy something unique, something special, something that there's not a lot of there, you're going to pay a premium. That's just the way it is.
I agree with that. That if you want to buy a stock that's working, you need to buy it as it's going up. You don't want to be buying it as it's going down. I love to point out AMD because so many people talk about how AMD is such a great investment right now. How can you say AMD is a great investment? You don't know where the bottom is, right? Because people are calling for the bottom at 160, at 150, at 140, at 130, at 120, at 115. The bottom was called that whole way down. And if you bought each of those bottoms, you're getting absolutely ransacked. You're getting your money stolen. Day after day after day. Look, I was there, right? The second time I blew out my account was gold was going down. It was in a obvious downtrend. It couldn't be more obvious. It was just like this one. And I saw someone on the internet saying, hey, you need to buy gold. It's at a generational low. Buy as much gold as you possibly can. So I was like, all right, here we go. So I bought all the options I could afford on GLD, GDX, GDXJ, Just, Nugget, you name whatever gold related market there was, I bought all the options for it. And day after day after day after day, I was getting basically stolen. I saw my account evaporating day after day after day as it was going down. All I had to do was wait for it to be going up. How do you know if it's going up or down? Throw on the trend template. I even had this conversation with Steve Burns. Mentioned him earlier, but I'll never forget the conversation I had with him. I was up in the extra bedroom of my house, and we're on Skype going back and forth. And he said, well, Chris, is the stock trending up or is it trending down? I was like, I don't know. How do I know if it's trending up or if it's trending down? He's like, just add some moving averages on your chart. Easy. How does a moving average work? It's the average price over X number of days. So if it is trending up, it's going to be above the average price over any number of days, honestly. Let's go back to Palantir, right? So currently, the average price over the last 10 days is around $73. The average price over the last 20 days is around 72, 75, right? The average price over the last 50 days is 68.06. When it's above the average price, that means the price is going up. And it is a-okay to buy it as it's going up, right? Because this is a decent example, right? I would much rather buy it. I'll put it right here. Put it right there. At $74.61 when it's going up through 74 because it's showing strength. That means the price is going up versus buying it as it's peaked, closing under moving averages and going down, right? I didn't have to waste any time right here. There was like 2 weeks maybe when it was below that point. I didn't waste any time. I didn't waste any capital. And I certainly didn't put any risk on the table until it's moving in the direction that I want it to go. And you can do the same. And you don't have to hold it while it's going down. And anybody who says you have to hold a stock that's going down doesn't understand how the game works, because the game works when only price pays. Only price pays.
Now, here's the thing. It ain't the only thing that will show you the path as far as Palantir. Look at the rule of 40. The rule of 40, by the way, is something we talked about on the academy at patreon.com/Tom Nash. I teach people these things, and one of the systems we went over is the rule of 40. So according to the rule of 40, basically, if a company scores at this test 40, it is phenomenal. 35 is good, 30 is decent, anything below 30 is average, right? But the optimal score is 40, right? Basically, you look at two things. Number one, what is the growth percentage of your revenues? And number two, what is your free cash flow margin? In the case of Palantir, the free cash flow margin is insane. It is 38%. And the growth rate is currently 24% of revenues, which means that Palantir currently scores 62 on the rule of 40 test. That is phenomenal. One of the best in the world at that specific metric. Now,
okay, it can score 1,000. It can score 14,307,000. But if price isn't going up, it doesn't matter. Doesn't matter at all. I had a question from our Discord where they were asking about how do you find stocks inside of Outlier. So real quick, what I want to show is today the bull list has, I think I saw it just a second ago before I clicked a button. Sorry. I think it was 77. Yeah, 77 names came through on the bull list today with buy signals. 41 came through today with sell signals. You could start here with this bull and bear list, but what I like to do is go into our screener, which is what I clicked a moment ago, and then you can adjust to find how this works for you. Now, this is how I look at it. I look for positive returns with the outlier signals, buy and hold signals, outlier returns versus buy and hold, I should say. I look for over 1 million shares average daily volume, obviously with the buy signal, with the less than a 5% move in the last 5 days. So the outlier move hasn't started yet. I like to go at least 20 on the price. I am a stock snob, so I want it to be as expensive as possible. I look at the heat map. You know, we always talk about the heat map, the fear and greed score. I basically want it to be any fear, almost all the greed. So basically 90% of all the options out there, but not the total amount of greed, because I want that heat map still moving up, right? If it's at the greed score goes from 0 to 50, if it's already at greed of 40, then it doesn't have much more to go. And then my uptrend indicator, that's the background behind all the charts, right? If it shows where the outlier trend template's already showing it to be bearish or bullish, makes it easy, right? And then it'll pop out what comes through today. So today's January 24th. There's only 3. DEC has a 311% return following the outlier signals. GoDaddy, 164%, and Visa, 22%. So yeah, it just makes it super easy when you can click a couple buttons, go through 77 stocks, and for me, 3 fit my criteria. So I'm interested. I would go check those out at that point. But let's do this. Let's change gears and let's do let's rank this video. So in the chat, do me a favor, down below, put your ranking for this video. I get frustrated with Tom Nash because I know he's got good information. But at the same time, when he talks about dollar cost averaging into a stock, meaning buy it when it's lower, you can dollar cost average up, sure. But do you actually want a dollar cost average all the way down? Oh, I just closed that window just a second. Do you actually want a dollar cost average all the way down on something like AMD at 160, 150, 140, 130, 120, 115 when you don't actually know when it's going to stop? Or would you rather start dollar cost averaging on the other side and getting in at 30, 35, 40, 45, 50? I would much rather buy it at a higher price because that means price is going up and I'm winning and I'm making money. Whereas if price is going down, I'm just throwing good money after bad. I'm losing more and more and more almost every single day. So I get frustrated with that, but I know that we all have different styles. He has a longer term horizon, which apparently means that he's okay with losing for a while. I'm not. I'm a winner. I want you to be a winner too. So I'm going to throw this in the frustrating. That I would give it a 3, frustrating. Because you don't have to hold anything while it's going down. I hope that you don't. I hope that you've watched enough of these videos to know you don't have to do that. So in the chat, tell me what you're trading. And of course, come back tomorrow where we'll help you save time, make money, and start winning with less risk together as a team. And have a fantastic day. We'll talk soon.